Hello, everyone. This is Lee DiLorenzo, President of United Asset Strategies. I'm coming to you today, as we have been, to talk about where we've been, where we are, where we think we're going, and I'll be joined shortly by Thomas Healy, our Director of Client Portfolios. Before I get started, I do want to say thank you. Thank you to our clients for allowing us to be stewards to your family's assets and to yourselves during this horrific time of the coronavirus. And one of the things that's just making it even worse is the volatility in the market. The volatility, usually it's less than 1% a day. It's averaged 4.55% for the month of March. Almost 5% a day swings in the market. It's just making things a little bit crazy for us to figure out where a top or where a bottom's going to be. And we do think volatility is going to continue, not at the rate it did from March, but we do think volatility will continue because it's fueled by uncertainty. And I'm going to turn it over to Tom now to talk to you about some of the ingredients that should fuel continued uncertainty in the months to come.
Well, these are clearly very extraordinary times. I've been through 30 years of bear markets and market pullbacks, and each one is unique in its impact. This is clearly unique in that it's really more of a public health crisis that initiated the economic downturn. And that's the first point we make in our letter. Of the things we're watching going forward, one is the shape of the viral curve. The good news is there's a lot of data, real-time data being brought out by governors and federal officials that we can assess to determine where are we on this curve, because in our view, we're not going to get a sustained improvement in the economy or the market until we can get on the other side of that curve and that looks sustainable. We're also assessing the potential for therapeutics or other vaccines that might be effective in treating the coronavirus, and we've also looked at which companies can benefit and have taken some positions in those types of companies. But key to this entire thing is getting to the other side of the curve and a expectation that we're going to be out of the woods, so to speak, at some point from a health perspective. The other thing that we look to going forward and have been assessing is the policy response. And that's been very strong and also very swift. First, we saw the Federal Reserve moving quickly. They've cut rates twice, but more importantly, they've provided significant liquidity to backstop credit markets. You saw in a recent video that Matt DiLorenzo, our fixed income colleague, produced that's on the web. It's created a lot of dislocations in the bond market, but it's also created a lot of opportunities, and we're really taking advantage of some of those opportunities that's been created. But the Federal Reserve has been very strong in using their balance sheet to stabilize markets. And then Congress, in a rare sign of bipartisanship, were able to move quickly on the passage of a $2+ trillion stimulus package or rescue package. We think that that's not going to be sufficient, but it is a good start. It's got fits and starts in its rollout, particularly when it comes to direct payments and also loans to small businesses. But there's also already talks of another $250 billion to help small business loans, and also about a $700 million package being discussed by the president and also the Speaker of the House, related to things like additional state aid and also infrastructure. So we think the policy response has been very strong and will continue to have to be to avoid a true economic depression. The other thing we're looking to is more towards technical analysis. Now, typically, as we assess markets and look for security selection, we use both technical analysis, charts and graphs, and fundamental analysis, things like balance sheets and income statements and earnings. Now, the fundamental analysis part of it is very difficult right now because of a lack of visibility. First, many companies are suspending guidance altogether, not providing forward-looking expectations because they don't have any right now. The second thing is the SEC has granted companies a 45-day extension in filing their quarterly, what we call the 10Q. Now, the 10Q has a wealth of information for our analysts to look through to further either solidify or poke holes in our thesis on various stocks we own or might want to own. The lack of visibility has made it very difficult to do fundamental analysis and to assess where companies are in terms of value. So we're using technical analysis even more than normal to look at different levels of support and resistance and ways as we can better assess when do we want to put some of this cash to work that we've discussed having raised in recent weeks, and what levels do we want to do that at. And then the final thing I'd say is economic data. We assess a lot of different economic data points in trying to determine what trends are coming, what things look like, the economy and markets. Right now, the economic data is really, really difficult to assess. I mean, look at the new jobless claims, initial jobless claims, coming out of what was a 50-year low in terms of unemployment. We've had 2 successive weeks where we've got a total of 10 million new people who filed jobless claims, initial jobless claims. These are huge numbers, and we expect those huge numbers to continue. We also expect things like housing starts, new car sales, a lot of the different data points that we assess, we're seeing them really fall off a cliff. So what we're trying to figure out is when we do get over the hump, so to speak, or over the curve, and the government starts to relax the stay-at-home orders. Right now, there's like 95% of America is under a stay-at-home order. So clearly, when the government starts to open up the economy again, the pace at which that happens will be very difficult to assess. But we're going to be watching very closely, because what we probably will see, the expectation initially or hopes where we'd have a V-shaped recovery where the government would say, turn the lights back on, the economy would take right back off. It's more likely it'll be something of a U. There's going to be consolidation in some industries like retail that have gotten hit hard may not recover. And so we're trying to assess the landscape. The economic data is very, very choppy. Look at China, where the industrial data fell off a cliff. When they lock things down, they've started opening up again, and we've seen an improvement in the economic data. We would anticipate that to happen here as well, although the different data points are going to be mixed. So that's what we're watching going forward to determine what level of aggressiveness we want to take in putting cash back to work, in being fully invested, versus where we're at now, where risk management is a key part of our investment thesis. So with that, I'm going to turn it back to Lee for concluding remarks.
Thank you, Tom. I do want to bring it home by discussing the different government programs that have been put out. Some are for small businesses, and it is very confusing. Some of the programs you go to the SBA website for, and some of them you have to go to your bank. But the good news is the process of application has been very simple. Although the instructions are not, the application process is. So if you have any questions, we're not experts, but we're getting there, so please feel free to call us and let's patiently get through this together. As individuals, there's been programs that are allowing us to delay distributions from IRAs. There's other programs that are allowing us to borrow, up to $100,000 instead of $50,000, or withdrawals for hardship without penalties. There's a variety of access to funds that we can help you with if you have any questions. So with that, those are things we can control, and we want to hear from you. We want to help you get through this fiscal crisis together. And in closing, I can't help but comment that this is Holy Week for a couple of major religions around the world. And whether you're celebrating Passover or Easter, we want to wish you and your family a very happy, healthy period of time. Thank you very much.